Namaskar, hello, and welcome, friends, to this Advanced Financial Modeling, Stock Research, and Valuation course. This course is for investors and finance students who are looking to understand how professionals value stocks. The course comes with a dual certification program. One is for the course completion, and one is for internship completion. So, for those who are interested in enrolling to the course certification program, the details are given in the description and in the end of the video. You can check that out. Meanwhile, the entire course material is available freely on YouTube, like this video, so you can learn it freely anywhere, anytime. Students who are pursuing courses like MBA Finance, CFA, CA, CPA, MCOM, BCom have all taken this course and benefited from it. If you are an investor or if you are a finance student, this course is for you if you are looking to understand how professionals value their stocks. What is the eligibility for this course? The good news is we have structured the program assuming that the viewer is a beginner. So, from a beginning stage, if you do all the assignments and all the chapters one by one without skipping them and applying them hands on, then by the end of this course, you are assured to have an advanced level knowledge of how stock valuation is being done. And regarding the course content, let us discuss that now. First, we come to the stock filtration. Any stock exchange, if you visit, you will find that there are thousands of stocks. For example, Nasdaq has more than 3,000 stocks. NSE and BSE together have around 8,000 stocks. So, to begin with, we need to find out a way where we can filter out all these thousands of stocks and reduce the number to a manageable list which we can do deep analysis on. In the first assignment and first chapter, we show you an efficient way, an intelligent way of segregating the stocks and filtering them out. In the second chapter and second assignment, we try to understand how to interpret the cash flow statement, the balance sheet, and the income statement and bring them together to do ratio analysis. Ratio analysis brings us to chapter 3 and assignment 3. In chapter 4, assignment 4, we are going to study together in a detailed way how to do discounted cash flow valuation. Apart from that, we will also learn how to do dividend discount model valuation and residual income valuation. After learning how to do discounted cash flow valuation, we get into detailed reading of an annual report. We take a company which is listed in the stock markets and we read the annual report together along with you. After learning discounted cash flow modeling and valuation, we move into valuation of financial institutions, that is, banks, NBFCs, etc. The valuation of banks and financial institutions is a bit different than the typical manufacturing company or even an IT company. So we understand how to mathematically value a bank or a financial institution in this assignment. This is assignment 6, chapter 6. Assignment 7, chapter 7 is about understanding the monetary system and the currencies. We delve deep into the history of monetary system, the evolution of currencies, and the impact of central banking policies and the state's financial and monetary policies on the economy, especially during recession times. In the last chapter, that is assignment 8, chapter 8, we move into understanding the specific analytical parameters for specific industries and specific companies. For example, a mining company is analyzed differently than a retail company. A retail company is analyzed differently compared to an IT company. An IT company is analyzed differently compared to a banking company. So specifically, each of these industries have some specific parameters. We understand what those parameters are and how to understand them in this last assignment. And once all these things are over, the main goal is for you to become capable of valuing stocks like professionals do and creating reports like professionals do. So without further ado, let's get started. Let's start with our assignment 1, which is about filtration of stocks. As we have said, if you move into stock exchanges, for example, Nasdaq or National Stock Exchange of India, you will find that there are thousands of stocks. There are small caps, mid caps, large caps, there are value stocks, growth stocks, there are micro caps, and all these variations are there intermingling with each other. So, how to find a way to filter them according to performance so that we can do deep analysis on those stocks which have a performance which interests us? Let's begin with that. Friends, if you go to the NSE website and if you check out the entire list of stocks which are present in NSE listings, you will find there is this Excel sheet coming up. This is taken from the NSE website itself. The number of stocks here is 2,381. Okay. So there are 2,381 stocks currently listed in NSE. Similarly, if you go to the BSE website and go for the stocks, the count of stocks, then you will see that there is around 4,318 stocks which are listed in BSE. So for an investment consultant or an investment advisor or a research analyst, the primary job is to filter out the stocks which they can focus for deeper analysis from this entire gamut or entire list of this thousands of stocks. And it's not an easy task. So we have to find convenient ways or intelligent ways to filter out stocks which interests us more and filter the stocks which are less interesting and keep them for later or not pay attention to them for deeper analysis. So this is the method we are going to apply right now in our first assignment. So now the question is, how do we go about it? So friends, if you go to any website where the stocks are represented sequentially year-wise in terms of their profit and loss, balance sheet and cash flow statements, you will see two primary factors, that is sales and profit. These two factors have very definitive ways and patterns in which they behave company-wise. Certain companies have clear growth patterns. That is, if you look at a sequence of 10 years, you will see that company is growing sequentially in a very smooth pattern. For example, I can say an Infosys or a TCS. You can see that there is a clear, smooth growth pattern from lower numbers to higher numbers in a very gradual way and very definitive way. That is one category of companies. Then you may also find companies which are stagnated, not growing at all. Not degrowing, but not growing either. Then there are companies which are actually degrowing, where due to some reason, either the industry is shrinking or the company itself is not able to cope up with operational expenses or capital expenses or whatever may be the reason, they are not able to cope up and they are declining. That is another way. Then there are some cyclical companies or volatile companies. They may be having profits sometimes, they may not be having profits sometimes. Sometimes the revenues are very high, sometimes the revenues are very low. So that is another category of companies. Then you will find another category of companies where, say, out of the 10 years, the previous 7 years or 8 years were not that good. They were either flat or they were volatile or something like that. And in last 3 years or last 1 year or last 6 months, they are starting to show definite quantum jump in terms of their performance. For example, let's say the company for 7 years or 8 years was doing revenues of about, say, from 300 crores till 500 crores. Right now, suddenly you can see a jump and they are doing 1,000 crores or 1,500 crores, something like that. I'm just taking an assumed example here. So that kind of pattern is also found. Then there are other companies which show certain turnaround patterns. Turnaround patterns means they were loss-making, negative reserves, declining kind of companies. But after, say, 7 or 8 years of struggle or 5 years of struggle, for the last 2-3 years or maybe for the last 2-3 quarters, they are showing signs of revival. They have restructured, or maybe they have figured out certain operational aspects which are benefiting them. Whatever may be the reason, that is up to us to verify what is the reason and how to go about it. But for whatever reason, the numbers are showing up there. So that is another category of companies. So based on this, we are going to go sector by sector and categorize the performance of these companies. Performance in terms of what? Performance in terms of only two matrices. Only two matrices. They are sales and profit. Now, we spoke about certain categories of patterns, right? Turnaround pattern, growth pattern, declining pattern, zigzag pattern, volatile pattern, flat pattern, quantum jump pattern, all these things. So we have abbreviated them to represent all these categories that we just discussed. So here in this sheet, you can see, this is basically the assignment sheet we'll be using. So Q represents there is a spike in last 1, 2 or 3 quarters. Whatever numbers they are doing previously, there is a clear difference, quantum jump in terms of the revenues. and also profits. Y. Y means year-wise you can see clear growth in revenues and profit. F means no growth or degrowth. It's mostly a flattish kind of a pattern across the 10 years. Okay. Then there are uncertain ups and downs or cyclicality, or there is difficulty, you cannot figure out which direction it is going. So that is another, which is called the Z category or the volatile category. Decline means clear decline in revenues and profitability. TQ and TY, these are basically turnaround companies. TQ means the turnaround has happened maybe in the last 2-3 quarters or last one or two quarters. You can see the numbers in the last 1 or 2 quarters jumping. TY means maybe the last 8 or 9 years or 7 or 8 years were bad, but in the last 1, 2 or 3 years, the numbers have turned around. Okay? So these are the categories we have to check the revenue patterns and the profit patterns separately and decipher what their category should be called. So let us do a demonstration here by selecting a sector. So friends, we will be using a website called screener.in for our analysis. And it's screener.in. You can go there. After going there, what you have to do is click on screens. And once you click on screens, you will find that on the right hand side, there is a list of sectors: aerospace, agrochemicals, air transport, alcoholic beverages, auto ancillaries, automobile, etc., etc. There is a list of different sectors. Okay. Now, what do we do about it? Let's say we go to one of the sectors, say healthcare. Once you click on that sector, you basically get the entire list of companies which are listed in NSE and BSE in that sector. And if you click on any of those companies, you get to the detailed page for that particular company. So here we have got into Apollo Hospitals, right? So here, first you will see there is a chart which represents the last 12 months or 1 year. You can extend it to 3 years, 5 years, 10 years, and max. Also, you can reduce it to 6 months and 1 month. This is what you can do. Let us take it back to 1 year. Now, below this, some pros and cons are written here. Then there is peer comparison. Our focus right now is not going to be on any of these. We will be focusing only on 2 things. One is this one, the quarterly results sector or segment, and the profit and loss segment. So these 2 segments we will be focusing on. And also in these 2 segments even, we will not be focusing on all the parameters. We will be first focusing on 2 things: the sales and the net profit, what their numbers are, on what their patterns are. Okay. So here you can see we start with the profit and loss of yearly numbers, right? We start with the yearly number chart first. So here you can see the table shows us the numbers from March 2012 to March 2023. And if you just select these numbers and take a simple glance at them, you will understand that this belongs to the Y category. Why? Because you can see there is a clear growth pattern from 1 year to the next. From 3148 to 3769, 3769 to 4357, 4357 to 5129, right up till 16,612 crores. And this year, till last 4 quarters, their numbers total to 18,418. So this is basically a clear signal that this belongs to the Y category. Y category means there is a clear growth pattern from year to year. So if we are going to do the healthcare sector, I'll get to that, which sectors we are going to do. But as a demonstration, let me just write it here. So first we write Apollo Hospitals, or you can copy the name also from the sheet. Sales category is Y. The next number that we require is the sales growth. So sales growth basically is, I would say, 10 years of CAGR. CAGR means the compounded growth rate for the last 10 years. How to calculate it? Let me get into it just in a short while. So here, let's say we are talking about March 2023. It is 16,612 and it's a smooth growth pattern, right? And if you subtract 10 years, you will see the number is 3769 crores, and it increased to 16,612 crores. So we have to find the compounded annual growth rate, CAGR. How do we do that? Very simple. We write the final number, 16,612. Divide it by the initial number, which is, let me check once again, it is 3769. 3769. Now, this entire ratio, we do it to the power of 1 by the number of years, which is 10. Now, this entire expression minus 1 gives us the CAGR, or the compounded annual growth rate. It comes to 0.16. So this we can do for each of the companies in a sector, right? Now, sales category has been clearly defined. Now we go to the profit category and profit growth rate. We come to the net profit section. So you can see it's 218, 303, 315, 335, 235. So the profit category, this is a clear another demonstration that if the sales category is Y, does not necessarily mean that the same will be true for the profit category also. It can be different too. So here you can see from the initial stages, the numbers dwindle till March of 2018. Then again they revived and they are doing very well right now, right? So how do you define this? For this particular one, you can say there are two segments. From 2012 till 2018, it's in a declining mode. And then from 2018, again it's in a rising mode, right? There is some volatility, right? So there are two features. From 218, they have definitively grown. They have grown to thousands of crores, right? 1108 crore, 844 crore, 822 crore. There is a clear rise here. But it is not straightforward. There is an element of volatility in it. So we can use two categories to represent one stream of numbers also. So here I would choose, in my judgment, I would choose it's volatile and growing. So ZY. This will be my judgment. Okay? ZY. It has a growth pattern. It has grown. But it has grown through volatilities, very definitive volatilities, right? Then we come to the profit growth rate. Profit growth rate, obviously, again, last 10 years will take. So 303, 844. We do the same thing here. 844 by 303. This we do to the power 1 by 10. To the power 1 by 10. Minus 1. So this comes to 0.10787. You can reduce the decimals. Coming to 11. So 0.16 and 0.11 means they are 11% and 16%. That's what it means. Now we come to the size category. Size category means there is large cap, there is mid cap, there is small cap, right? And there is something added also which is called micro cap, which is very popular these days among the retail investors. So we have to cater to the investor. We have to find out all these three. Before finding out the category, let us first define what each of these terms mean. So friends, a large cap stock means a company with over 20,000 crore of market cap, right? This is what large cap stock is defined as in Indian context. A mid cap means a company whose market cap is between 5,000 crores and 20,000 crores. So it is greater than 5,000 crores, but it is less than 20,000 crores. Okay. Small cap means its market cap is less than 5,000 crores. Okay. Any company whose market cap is less than 5,000 crores is basically what is called a small cap. Now there is some ambiguity regarding the definition of micro cap. For a portion of its definition, it collides with the definition of small cap. So there are two ways in which micro cap is represented. One is below top 500 stocks. Below top 500 stocks in any listed exchange. Right? That is one part of the definition. Then the second part is this one overlaps with the small cap definition, which means this is less than 5,000 crore. So a part of the definition overlaps with the small cap, but another definition that goes along with the small cap definition is it is a small cap stock which lies below the top 500 stocks in any listed exchange. Right? So this is what the definition of this is. Now coming to Apollo Hospital, let's see the market cap of Apollo Hospital. So it is 86,409 crores. So this definitely belongs to large cap category. So we write large cap. Now, why do we have to bifurcate large cap, mid cap, small cap and micro cap? Basically, when we are creating a complete portfolio of an investor, the risk has to be diversified so that there is return and also there is stability. There is basically a balance between risk and return. There is not excess volatility and there is also not excess safety by compromising all kinds of possibilities and risks. So we have to create a blend of high potential, high risk stocks, which can be a micro cap or a small cap, and blend it with a certain amount of large cap stocks or blue chip stocks, which give the portfolio that kind of stability. So we analyze in all these segments, we delve into all these segments, and then we create a certain blend which balances risk and return in a very nice way. So that's why we have to bifurcate the stocks into the categories of large cap, mid cap, small cap and micro cap. This is one reason, that is we want to create an entire portfolio which is complete in itself, and it consists of large caps, mid caps, high growth stocks, potential multi-bagger stocks, small caps, micro caps, etc. Now, another reason is some investor might want you to only handle one of the segments. Maybe he will say, I am okay with my large cap stock portfolio, but I am not very comfortable selecting small caps. You are an industry specialist. You should be able to do it. So just find me small caps which have potential of 10x, 100x, whatever amount of growth, and I'll be happy. I'll just want that kind of a portfolio. So that kind of role, the investment consultant or the advisor or the research analyst might have to play. So for that also, this bifurcation is very important. So for these couple of reasons mainly, we have to understand which stock falls in the large cap category, which stock falls in the mid cap category, and which one falls in small cap or micro cap category. So friends, this is our assignment. Now coming to the portion of which sectors are we going to do. So I would say few sectors I would say you can do mandatorily. So let's say here we have this screener. And these are the sectors. You have to select, I would say, IT. You have to select another segment is, first segment is IT software. I would highly recommend that you do this sector. Another sector I would recommend you strongly to do is the banking sector. Where is it? Here, the banks. You do your work on this, because later on we'll be learning how to analyze the banks, because there is a separate way of valuing them. So we'll learn that. So do the banks. These two you do. Apart from that, do another sector or two sector or three sectors as per your wish. You can select and do that. It can be healthcare, it can be finance, it can be financial services, it can be entertainment, education, whichever one you want to do, you just do. I am not going to put a constraint on it. You can do 1, 2 or 3 sectors and follow one thumb rule. Whichever stock is below 100 crore of market cap, just ignore that. Only select the stocks which are above 100 crore of market cap. Okay. So I think we are good to go with our first assignment. I would ideally like to give around 1 week for it. If you can do it earlier, better. And if you want more time, because it's a self-paced kind of a curriculum, you can do it at your own pace, no problems. So guys, try this assignment surely at home. If you come across doubts, share in the comments. I shall respond. For those who have enrolled to the internship, share your assignments on the mail ID given to you. The enrollment link is given in the description. Hope you enjoyed this video. If this video added value to you, please like the video and subscribe to the channel. Share this with a friend who is interested in finance and investing. See you in the next assignment.